that 9 times PE you're referring to is probably based on this year, which includes the one-off gains. And if we look into 2023, where we set aside on the stock market's movement for the next 12 months, then we think that it's trading more in terms of over 20 times PE, which is higher than most of the peers in the region, as well as competitor in Korea. It has always been traded at a high PE for a very long time. But our argument from here is that because of a lot of deceleration in terms of growth that we are seeing in Korea, as well as a lot of these stakeholder mismanagement, corporate governance issues, weak operational risk management that we have just saw, and potential regulatory risks, we think the investors should be cautious in chasing any kind of technical rebound in the stock.
So you laid out all the problems there. What do you think it really triggered? Is it really the antitrust concerns, or is it just the loss of market share that the market is fretting over right now?
Yeah, I guess the near-term reaction is concerns surrounding regulations as well as the potential losses in the market share. But what investors need to be aware of, that this is a continuation of the trends that we started to see starting last year, and we would call it a growing pain. It is about company being on the fast track growth over the past decade, but when you kind of start to see the growth slow down and you have the scale, then you have a lot of stakeholders issues that are started to pop up, and that relates to regulators, that relates to their own management, and now what we are seeing is the poor risk management, operational risk management, that's really kind of get us to question whether the company is grown enough to really tackle the challenge of being mature and big enough that it has influence to individuals' lives in Korean nation.